Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. Well, the market's under pressure, no doubt about it. It's just that the Bank Nifty weekly options expiry, as we discussed, it's somewhere around 26,750. 26,700 is safe now, we'll have to say. 26,800 also looks safe on the upside. So most of those options would have become zero. Despite all the volatility, the market's moved all of 100 points. So again, another expiry where the option writers would have got a lot of money because it's just moved in a 100-point band. Ashwani Gujral and Mitesh Thakkar with us for BTST calls. Ashwani, 10,950 holding by the skin of its teeth, but your thoughts and of course the BTST calls.
See, the market is clearly pushing on the downside. Now, whether it's going to break today or tomorrow or Monday, that nobody can say, but I would be comfortable taking shorts home, both on Nifty as well as Bank Nifty, because the momentum is now picking up on the downside at 10,940, 950. The buyer momentum should be better, but again, we'll have to see if this level gets taken out. The odds are fairly high that it does. On individual stocks, Ashok Leyland is back to the lows of the day, so that's a sell with a stop of 108, target of 100. Granules is a sell with a stop of 88, target of 82. And Adani Enterprise buy with a stop of 145, target of 157.
Okay, Mitesh, what would your calls be?
Yeah, I have a sell on Hexaware with a stop, or more than more of a STVT kind of a call. Sell on Hexaware with a stop at 490 for targets of around 474, 472. And ITC can be a BTST with a stop below 270 and look for 279, 280 to be tested most likely by tomorrow day end.
Okay, by the way, it's been a tough market for the mid caps. In the morning, we discussed Havels, which was making highs in the morning. Now it's almost making lows. It's that kind of a market. Again, comes out with numbers tomorrow, Havels. Just see the intraday chart on that stock. And over the last 5 or 10 minutes, there's a bit of a decline that's taking place on the stock now. Of course, there are a lot of other stocks making lows of the day. Just pull out intraday chart of Arvind, for example, in the mid caps. That's seeing quite a bit of lower levels right now. Aurobindo Pharma, not exactly a mid cap, used to be a Nifty stock at one point, of course, but Pharma has been weak, so that one's down quite a bit. In fact, making the lows right now. In the morning, we had discussed Cadila Healthcare, that stock right now also making lows of the day. Ashwani, is this Pharma rally getting over? Because we had a big move and it looked like the sector had bottomed out, but as we speak, again, the Nifty Pharma down about 1.7%.
See, the point is, if bad news resumes, then, bottoming out does not work out. But still, the pharma index, it has support around this 8,000, 8,300 zone. Maybe it's a retest, but the way, these stocks are falling, it looks fairly ominous. So, if that should be your first sector of buying, and possibly that rally was really a pullback rally.
Okay. All right. Well, we have the management of Kotak Mahindra Bank addressing the press, so let's dip into that.
Account at 5.61%, which is about the same as what was there last year. We've also seen growth in the deposits, which is below 1 crore, which is where the focus has been. Slippages in the quarter have been reasonably small at 320 crores, which is about 0.18% of our overall advances. Our SMA2 number, again, pretty contained at 186 crores. Cost to income for the quarter at 45.8%. So that's broadly been the highlight at the bank. Open to taking questions on that.
Could you throw some more light on the equity segment provisioning that you mentioned? Because we have not seen sharp jump in slippages, but what is exactly this provisioning? And when you say on investment, it's specifically to the government bonds investments, and if so, how much was that MTM provision?
Sure.
Yeah, so bulk of that is really investments. These are basically, if you see the 10-year has moved pretty sharply. And in fact, RBI has allowed a dispensation of writing it over 4 quarters. We have not taken that dispensation. So we've taken the entire hit right now itself. Actually, if you look at it post 30th June, interest rates have actually moved the other way. So if you try and recalculate, some of that write-off probably has come back really. But close to about 200 crores of that is arising out of investments, GSECs.
So have you factored in the Fed call circular?
But just 1 minute, sorry. So that was one part. The other part really is, like Jaimin mentioned, I think it
Okay, that's Kotak. That's the market, not of course, not liking the numbers in the sense that the stock had run up a lot. It's the most expensive, among the most expensive private banks that we have, trading at par, perhaps at even higher than HDFC Bank's valuation. So 1348 is what we have on Kotak. Porinjo Velat, MD and Portfolio Manager at Equity Intelligence, is with us. Porinjo, good afternoon. Quite a bit of pain in mid caps and small caps. Last we spoke, you were talking about it. Is there a bit of a regret in loading up in too many mid caps and small caps last year, you reckon, or you think this is a phase and it will pass?
Yes, Anuj, I agree with you. The pain is not only for the stocks, even the fund managers have the pain. But I don't regret. This is things happen like this. Now, I'm a fund manager who has been, delivering 45.2% CAGR for the last 5 years, calendar years. So this year we are down. We are the worst performer among the fund management companies in India. The last 5 months I'm talking about, 5-6 months. It is true that this was much beyond, expected kind of a correction. And it is also true there was a euphoria, especially small and mid-cap stocks have been, sustainably going up for the 5 years. The natural tendency, a lot of people, come at the peak of the markets. Big money comes at that point of time. And that euphoria, nobody will roll out. Even we used to discuss about that. But when I look back in the hindsight, even I feel, when we look at that, now we would have done like this or done like that. Anybody can even do a blame game also. But
Porinjo, I'm not talking about blame game. Porinjo, no, sorry, not talking about blame game. And I think I give it to you that you have delivered 40% CAGR, and I give it to you that you have been candid enough to admit that you have underperformed, and to come on national TV and say that you are the worst performing fund manager for the year. I think I give points to you on that. My thought process here is that your portfolio is still loaded in mid caps and small caps. In that, given the kind of environment that we have, is it time to perhaps move into some of the largest caps just to safeguard the investor interest right now?
No. This is the time for mid caps and small caps. After this big fall, I think this is the most exciting time. When I look back in the last 5 years, now is the time to really look into and load some of the, very selective, of course. I don't want to generalize too much. Selective mid and small caps. It's a wonderful time to pick with a very high margin of safety than the top quality stocks today. It's very, people, see, even we realized the need of moving into the large caps by December, January. In fact, all our new clients who joined after January, we have, ITC kind of some large caps also. But we could it was something like we got stuck with some of the stocks. Doesn't mean that those stocks are bad. But then we have to go through that pain of 5-6 months, whatever happened in the last, in this 2018. I feel this is the best time for selective stock picking in the mid and small caps. If you compare the last 5 years' time. There is no better valuations like what it is today. I'm very excited about that. And the old holdings, maybe one or two of them, we have gone wrong. Because if you remember, Anuj, I used to talk about, when the corporate governance, store management turning around. So a lot of people even have started talking, I told to buy store company shares. See, I have never stopped that way. See, store companies, what I have been, it's a theme in a changing India. When India is more changing into the white from the black and from unorganized to organized kind of economy. So these companies are, a lot of them have excellent business models. But they were not managing it properly. They were siphoning off money, and there was issue of corporate governance. Actually, it is happening. I still believe this is an excellent theme to play in Indian market for the next 2-3 years more. But I have gone wrong in one estimate. When this change is happening, structural change is happening in the economy, when the fear of being caught starts, all this rot and all those things comes out, like the NPS coming out in the banking system. In the corporate world, the problems in the, the frauds and cheating, all those kind of things which were practiced by the management, now they are coming out. So that is giving big pain also to some companies. So even we have got into a couple of stocks in our portfolio in that respect. I don't want to name the companies where the people, where the road coming out, the promoters are siphoning out maximum money, and still in India it is possible. In spite of all these things we are attempting to do, we are trying to create more transparency, corporate governance, reporting, compliance, everything is happening, but still, a lot of criminally managed companies, they are still siphoning out money, keeping minority shareholders. It's going on. Everybody knows that. But our legal system is so poor, it is still happening.
Okay.
So we have to live with that. Investors have to live with that. This is the biggest challenge when you invest in small and mid cap. That is why one has to be very smart. Extra effort is required to identify companies and monitor them.
Okay, that point is taken, Purinju. If we were to have the same conversation, say same time next year, do you think that the mid caps would have recovered?
Mid caps would have
recovered.
Not recover. They will go. Most of them will go beyond their earlier peaks, and they will outperform these current HDFCs and Bajaj Finance or the Hindustan Levers and TCS to a significant margin.
Okay. So when are you expecting this sort of pickup to take place in the mid caps? Is it going to start, say, by the end of this year? When do you anticipate the recovery to come through?
Maybe why not tomorrow? I think it's overdone already. So this can happen anytime. Now today is now 3:15. It can start now. It can start tomorrow. Maybe Monday. I don't know. Because some of those stocks have been punished, excessively, and despite the high valuations earlier, something. We have around 3,000 companies traded in the market today in India. 1,700 companies have gone down beyond 40%. 1,300 companies have fallen by 50% from the recent high. Around 750, 800 companies have fallen by 70%. So this is a huge, unusual crash, and the money is hiding. The money is attempting to hide behind the 15, 20 stocks. This won't sustain.
Okay. Purinju, so tell us, how are your investors reacting? Because, are you seeing redemption pressure? Are you seeing more inflows at lower levels? I mean, how's the investor behavior been from the PMS community?
There is absolutely no redemption pressure. Every month, including May and June, we have net inflows, hardly any withdrawals. And it is true that clients who have joined in the last 8-10 months or maybe 1 year, there is some kind of when they look at the price today of the NAV today, the prices here at the NAV, and it is little embarrassing even to me. But I strongly believe this is a passing phase. Many of these stocks are going to go to new heights. I'm very confident about them. But those clients, and the problem is, many clients have joined or invested in equities for the first time. They came at the peak.
Exactly.
You can imagine, and they don't understand this market dynamics much.
No, that was my next question actually. And also Purinju, in a sense that because, for example, one of the stocks that you had in your portfolios was UFO movies. Now, the point I'm trying to make here is that if you look at the volumes now, they've dried up. So, almost 800, 900 shares. And a lot of falls in mid-cap is now happening on very low volumes. So there's almost no exit. Is there a risk of something like 2008-9 playing out in the broader market where stocks fall 70-80% and some of them never go back to their previous highs?
So this low volume indicates one more thing, the other side. When they move up, without volume, it will go by 50-60% from here. I am looking at that way. when we talk about UFO, you are holding the stock. It's a wonderful company, the market leader in this country with a relevant business model. I'm not recommending this stock. But what I'm trying to tell you, the low volume will create, that 40, 50, 60% upward movement from here in the next 1 year without the volume. It will be very sharp movement also. So that is good. I like it that there is no volume at the lower level. The crazy selling, panic selling, irrational selling is coming down.
Okay.
That's what it shows. So it is good for the market. See, markets, we have not only the fundamental issues, a lot of technical factors have affected the market and the sentiment. Some of the factors are killing the market, but it's a temporary thing. Many of these recent restrictions by the regulator, or maybe the ASM, GSM kind of things have been not only complicating the system, it is creating a lot of fear factor, uncertainty. I hope these things will be changing. Even the regulator will take a much, different kind of a look at things. And I expect good things to happen to the market.
Okay. Puranju,
the technical factors.
Sure. Fair enough, Puranju. Wish you luck on that. Thanks a lot for joining us, and thanks a lot for being so candid as always. That's the word from Puranju Valiat for Equity Intelligence. We'll take a break and be back with market closing.
Welcome back. Well, there's definitely a recovery which has taken place on the market. So the Nifty is back at around 10,955, and the mid-cap index also a bit of a recovery around, say, 0.3% from the lows for the mid-cap index as well as for the Nifty Bank. Anuj, initially that 3 o'clock effect on the Nifty Bank was probably a little temporary. It dipped down to 0.5% in terms of a loss. It's recovered from then.
Yeah, I think, Ekta, this is very visible and clear that the Nifty and the Bank Nifty are relatively strong. I mean, obviously, there's been some bit of buying, and they're not breaking the lower end of the range. There's no trigger to break the lower end of the range, just like there's no trigger to break the higher end of the range as well. Even on the mid caps, you started at 1:5 advanced decline. You're ending at about 1:3. So stocks have recovered. But the recovery is also quite tentative in nature. You'll have to say that. The other point, I think, is that, the way metals have fallen is very interesting for me, because that normally is an indicator of where risk is right now, and it's no longer looking like just another correction. I would just want to pull out the data on metals index, perhaps Tata Steel, Hindalco over say 6 months or so thereabout, because you always come to know with hindsight whether that cycle ended at some point. I mean, Tata Steel is now trading below 500. Can we have 6-month chart of Tata Steel and see how that stock has behaved? That's a 6-month chart of Tata Steel. Now from a high of 747, it's now down about 30%. I think it's no longer a normal, correction. Same is the case with Vedanta. Just see the 6-month chart of Vedanta and 6-month chart of Hindalco as well. So for me, that also is a bit of an indicator. Metals normally also give you a bit of a sentiment check on what's happening in the broader market. So just keep an eye on that as well. Down 22% for Hindalco over 6 months.
Steep fall, but tomorrow is probably going to be a day where we are going to react to a lot of mid-caps as well. We've been talking about how Bata, Seat, Havells, Just Dial, all these stocks are coming out with numbers tomorrow.
Oh yeah, a lot of mid-caps earnings.
It's scary because you don't know.
I think one thing which stands out is that if the earnings are decent or good, then the market is willing to give benefit of doubt as well and react positively as well. But if you miss earnings estimate, or for stocks which have run up a lot, Mindtree for example, I mean, there's absolutely nothing that you can complain about Mindtree's earnings. The only way you can describe this earnings reaction perhaps is that because you had that big move, perhaps this Q1 surprise was priced in, and the fact that the market is now saying that Q2 would be obviously slower than Q1, and which is logical and obvious, that's down about 8%. But there's a good chance that at some point this one will bounce back. So let's see. I mean, very, very volatile on earnings. Devang Mehta of Centrum is with us. Devang, good afternoon. I wanted your thoughts first on Mindtree. That has been one of the stocks of the day, down 8%.
Afternoon, Anuj. Thanks for having me on the show. Yes, of course, the fall in the stock price has been actually too much of, I can say, sort of built up into the numbers. And though the numbers were good, and I was listening to you having a conversation that any margin of error being reported or a little bit of a miss on the estimates is normally putting a lot of pressure on the stocks. A case in point being not only Mindtree, but a stock like HUL delivering 12% type volume growth. But again, a lot of it was built in the price. So now it's a time that these stocks which have been doing well over a long-term period and trading at stretch valuations, maybe a little bit of miss also will create a bit of havoc in the market or than the stock prices themselves. And again, all the expensive stocks which are trading at expensive valuations, if the numbers have been delivered and the commentary is good, I think they are still clearly being rewarded.
Another example is actually GNA Axles. That stock reported what was a good set of numbers, but the stock is down 7%. Similar case with something like a Sterlite Tech also, which is reacting negatively to its numbers, down 3% for Sterlite Tech. Devang, I wanted your view on Hindalco. You know, this potential acquisition, which is probably weighing in terms of the balance sheet on the company. What's your sense? Should they go ahead with it, or would investors be happy if they stay away from this acquisition of Aleris?
I think clearly this is one space which is the so-called high beta in this type of the market, where you are very, very prone to get hurt if you are not in the right type of companies, or in fact right type of sector. And metal, again, as traditionally we know that it's been a highly cyclical sector, and what is happening right now to all these steel companies or even non-ferrous companies is that that the global demand is somehow coming back, but you see a lot of price volatility on the LME as well as the realizations coming in. I think this is not a right time for people to be in metal stocks. It's in purely if you need, you should be in an India-centric or a domestic type of stories, in the sense consumption stocks or banks or NBFCs. Metals we are clearly trying and avoiding at this point.
Ashwani, I think 3 or 4 months back, you had made a point, I think it was on the lighter note at that point, that Tata Steel making a big acquisition sometimes, going by the anecdotal evidence, marks the end of a cycle. But, 30% lower now on stocks in metals, large caps. Your thoughts on, say, something like a Tata Steel?
See, my sense is that stock prices forecast 6 months forward. Now, if the cycle is ending, then Tata Steel has a long way to go. Maybe, they tend to get back towards the bankruptcy zone, which is, 200, 250. But this definitely is not an ordinary fall from 750 down to 500. I wouldn't bet on, the stocks going up unless, there is a significant turn here, because the way it's showing, it's probably looking like sugar. So that shouldn't be the case if it's a small, stock correction.
Okay, that point is well taken. Doesn't look like a normal correction anymore now on steel. 500 now on Tata Steel. 2 minutes left for markets to close, so let's just do a quick recap. The Sensex, by the way, is ending in the green. It's been that kind of session today. Again, volatile, large caps seeing support at lower levels. So 17 points gain is what you have on the Sensex, 36,387. The Nifty going home with about 10 points cut. So again, 10,950 has been defended on the way down. The Bank Nifty is going home with about 90-point cut. 26,790 is what you have. And of course, the mid-cap index is down about 0.75%. In terms of index losers, Hindalco was your top loser, down about 6%. That's been one of the weakest stocks. Of course, Tata Steel as well, down about 1%. The pressure for the market came from 3 stocks. Kotak, down 4%. Larsen & Toubro, down about 2.5%. And HDFC, which was down about 1%. Apart from that, Bajaj Finserv was down about 1%. On the way up, Bajaj Finance, that really was perhaps one of your big stocks of the day, and that's because intraday it was down quite a bit. It's ending about 1% higher, but intraday it recovered quite a bit, and it's a fresh lifetime high that Bajaj Finance has hit. Market cap of 1.45 lakh crores is what you have on Bajaj Finance. Titan is the other stock which is recovering, by the way, so 3% higher, ending at the high point on Titan. 872 is what you have, once again taking support at 200-day moving average and moving on. Reliance batted for bulls today. In fact, it was a new high for Reliance today. 1114 is what you have, and Reliance is now ending at above 7 lakh crore market cap. ITC, M&M are the gainers. Mid caps, Ikta.
Well, for the mid-cap index, it was definitely another weak session. So yes, we did recover from the day's low, but the mid-cap index is still going home with a cut of around 0.8%, and the advanced decline ratio, yes, better than where we started from the start of the day, but currently still weak at around 1:2. If you're talking about specific stocks, there are a lot of stocks which reacted to numbers. So for example, DB Corp, which is up around 4.5%. We had something like and Ashok Leyland, which was quite weak and volatile for today's trading session. So that stock ended down around 4% by the end of trade. A lot of the financials were in focus today. So Bank of India, for example, from the PSU banking space was up around 5%. We had a couple of others such as Bandhan Bank, which built on gains. So that stock was up around 3.5%. And a couple of others included something like an NBCC, which rallied around 3% and PVR, which was up around 3.5% as well. In terms of losers, it was the usual suspects. So something like a PC Jewelers down around 8.5%. Sri Renuka from the entire sugar space, that stock just about at 10 rupees now, down 9%. And even something like a Mindtree, which was really the stock of the day in terms of a result reaction from the broader markets, that stock was down around 7%. So overall, I think quite a weak session, you would have to say, for the mid-caps, Anuj.
Yes, that continues, Ekta. Though today, I have to say that at lower level, there was some buying as well, which was visible. For example, a PVR. Just put out the intraday chart of PVR, actually. That would be quite interesting. A couple of stocks, in fact, PVR and also United Breweries. Now, that's, of course, PVR. Just see the intraday chart on that. So through the day, that one was strong, 2.7% higher. And United Breweries is the other one where, you have that stock recovering quite a bit. Almost a 7% intraday recovery is what we have on United Breweries. Almost, in fact, ending in the green. Let's take final thoughts then. Ashwani, what's the... okay, Mitesh, what's the verdict for the day then? Mitesh?
What remains, Anuj, is the fact that we've kind of managed to hold this 10,940, 950 zone. I think we have that 130-point range still on, but in case we break below 10,940, I think then we can look at a corrective action. I'm not yet looking at an upside breakout possibility purely because of the fact that the indicators on the hourly chart still show some kind of weakness. So there's a greater chance that eventually we might break 10,940. And once that happens, a minimum 100-point decline should happen. Possibly if 10,850, 860 goes, we can even look at lower levels.
Just Dial actually ended 3% low, 3% higher today ahead of its numbers. Devang, would you have a view on that particular stock?
No, Ekta, not covering the stock by any chance.
Okay. Any of the other mid caps that you'd be watching out for? Just a quick word on that.
I think clearly the polarization that has happened in the market right now, the large caps, the 10, 15 top large caps versus mid caps, that has to end somewhere. And there is a lot more of reasons to buy something into the housing space or housing finance space, rather, I would say. There are a lot of such candidates which can probably do very well from here, or something in the fast moving electrical goods space, something like a Havells, which probably will come up with numbers tomorrow. Again, not recommending the stock, but this electrical goods space or the ceramic space, where I think a lot of carnage has happened in the past few months. I think this all are the spaces which we are looking at in the current scheme of things, where financialization or formalization of the economy can be the themes for the next 6 months to 12 months to come.
Okay, all right, Devang, as well as Mitesh and Ashwani and everyone else, thanks very much for joining in and taking us through the last hour of trade. We need to take a break now, but up next, Indian real estate giant Lodha Developers is gearing up for its second attempt at an IPO. We'll get you the details on the other side.
Welcome back to Closing Bell. Well, the big headline actually coming in from the world of metals. After over a decade of buying Novelis, Kumar Mangalam Birla's flagship Hindalco is set to announce another large deal abroad. Now, sources tell CNBC TV18 that Hindalco is in final stages of talks for the acquisition of a US-based firm called Aleris. Nisha Poddar gets us exclusive details. Nisha, over to you.
After months of deliberations and a long due diligence process, we do gather from sources with direct knowledge that Hindalco has firmed up plans and putting final touches on the final announcement of the acquisition of Aleris International, the US-based company, for a whopping $2.5 billion. Just last week is what I gather. Both the parties agreed on all the terms of this particular transaction, and I do gather that Hindalco and its Canadian firm Novelis are looking at tying up funds for making this acquisition. There could be debt on a non-recourse basis for Hindalco on the books of Novelis, but what Hindalco is also toying with is probably an equity fundraising option of listing its ADR, though that is not firmed up at the moment. All options are in front of them is what we gather. It's going to be a strategic fit for Novelis, which is a Canadian-based firm, because of Aleris International's automotive segment presence and also its presence in the lucrative North American market. So that's an attraction bid. But the stock really fell down on our news report based on two important aspects. First, the debt levels of Hindalco will rise comparatively. It's 40,000 crore rupees of net debt on a consolidated basis currently. And on the other hand, it could be a expensive proposition with $200 million of EBITDA on Aleris International. It is 10 times in terms of valuation. So that could be a bit of a concern.
Okay, thank you, Nisha, for bringing us those exclusive details. The stock there ending around 6% lower. But moving on then, Indian real estate giant Lodha Developers is gearing up for its second attempt at an IPO. Now, the firm plans to raise over 5,000 crore rupees via its listing, which is expected later this month itself. CNBC TV18's Kevin Lee caught up with Abhishek Lodha, the company's MD and CEO, and began by asking him what portion of the funds would be a fresh issue and what will they be used for. Listen in to that very interesting conversation.
As per the DRHP, we intend to raise 3,750 crores as the primary issue, and we have an offer for sale of 1.8 crore shares, of which 80% of the money will come back into the company. So it's a significantly primary issue, and out of the money raised, about 4,500 crores will be used for prepayment of debt.
What is your current debt at, and what will it go down to after this?
So we will be at a debt of 13,500 crores after this raise, which will be a debt equity ratio of about 1.6, 1.7. Over the next 3 years, we expect to be much more deleveraged, with our DevCo becoming virtually debt-free and all our debt being linked to our rental assets.
Now, you had tried to go in for an IPO in 2009. That was shortly after the global financial crisis, so it's understood why you didn't go through with it. What has changed between now and then? Is it a much better place for real estate? Because in general, the market doesn't seem to be doing that well. There has been consolidation. Some players like yourself are doing well. Is this a big reason that you're going in for it now?
See, as a company, we have grown a lot. We've become, like I said, much more organized, much more governed. We have a much bigger scale of operations. Last year, we did over 9,000 crores of revenue, over 8,500 crores of collections from customers, over 8,100 crores of net new sales. We delivered over 11,000 units, which is not only by far the largest in our country, but the largest delivery of multi-storied homes and offices anywhere in the world outside China. And in that context, we see there is huge opportunity ahead, especially in the mid-income housing space, where clearly, last year 44% of our sales were in mid-income housing, what is called affordable housing. And we think that we have cracked the code of how to do that at a large scale in a quality manner at affordable prices. And we think that there is a lot of demand for that in the country. And we want to use this capital to strengthen our balance sheet and continue to grow our business, especially in the mid-income affordable housing segment, while delivering strong ROEs.
You've been carrying this debt around for a while. It's been a bit of a burden. Now you're saying that you're going to reduce that to 13,500 crores. You also said in the presentation inside that you aim to be a debt-free company by 2022. After this IPO goes down, now you've mentioned that you want to focus on the rental business apart from middle income and affordable housing. What is the plan for the rest of that debt?
As I'm constrained from not making any forward-looking statements, like I mentioned, we intend to be debt-free on the DevCo, the development company. There will be debt on the rental company.
What is the total amount of debt on the rental company as of now?
About 2,700 crores.
Okay. Now, this IPO has coincided with Moody's finally changing its outlook to positive on you. Is there a chance that you'd be looking to recycle some of the old debt that you're carrying now that it's possible for you to maybe raise cheaper funds?
Certainly, we will look at optimizing our cost of money, absolutely.
Moving on then, Reserve Bank of India will shortly issue new rupees 100 rupees note denomination in the Mahatma Gandhi New Series. As you can see on your screen, that one is expected to be in lavender color, and this can impact users like you and me as well. But on that note, let's slip into a quick break. The monsoon session of the Parliament has had a rough start. We'll get you all those details on the other side of this very short break. Stay tuned. Welcome back. Well, the monsoon session of Parliament has had a rough start. Parikshit Luthra joins us now on the phone line with the latest updates. Parikshit, good afternoon. Over to you.
Well, there were some developments in Parliament with the mob lynching. The Home Minister taken the lynching taking place in the country over the last couple of months, and said this is a result of fake news circulating on WhatsApp and other forms of social media. But eventually, this falls under the domain of the state government because of the state subject. At this point, staging a walkout completely. Also, opposition has been protesting against Jayant Sinha, the Union Minister. Other being
Okay, Parikshit, it seems like we have you on a bit of scratchy line. We will try and reconnect with you later. But let's do one thing. Let's take a short break and come back. We'll also discuss commodities and currencies with Manisha Gupta.
Welcome back, and the markets have been quite volatile when it comes to the non-agri space, starting right with the metal space, where we started Shanghai on a very positive note, actually, especially for zinc, which at one point in time was on an upper circuit of 6%, and that is because China did look to boost liquidity in the banking sector, and that is the reason you saw all of those Shanghai metals trading on the higher side. But LME did exactly opposite of that, and we are looking at a 2 to 3% of a cut across board in all of those metals. So when you look at the copper prices on LME, that one is trading at a one-year lows. We did see 6,000 breach on the weaker side as well. Ditto for zinc, 3.5% on the weaker side. Nickel, lead, you name it, and all the metals on LME are trading weak. Robin Barr, Head of Metals Research for Global Markets at Society General, now joins us on the phone line from London to throw more light on that. Robin, hi, good to have you. What is the trend that you're looking at? Because Shanghai saw some strength. We've seen exactly opposite of that on LME. How are you reading this metal trend in the two time zones?
There's a sense that the trade tensions are certainly not going away anytime soon. If anything, they're escalating. You mentioned the reports of the monetary easing by the PBOC yesterday, so that helped to boost prices. Then overnight, we've had some, I would say, fairly derogatory comments about U.S. trade policy from the Chinese foreign ministry, basically saying that the U.S. is flipping and flopping and doesn't know what really is important, and that I think was the further trigger for the sell-off that we've seen this morning. A key indicator, of course, is the Chinese currency, the yuan, that against the dollar has fallen to a new recent low and clearly may be seen by the markets as a policy measure to try and support the Chinese economy. By that I mean this implicit depreciation of the Chinese currency against the dollar at a time when other Asian currencies are falling as well against the dollar, which signifies at the end of the day dollar strength. And obviously dollar strength is a negative for commodity markets, simply because they're priced in per ton. So no let up in sight. The trend is down, and we're pretty much in the hands of the politicians in a way to try and bring us back from the cliff edge. Otherwise, this thing can get even nastier.
It is almost, it's already quite nasty for the metals as a sector, because the last couple of months and more, all we've seen is sell on all upticks in case of metals. From here on, with the kind of global scenario that we are working with, what is your sense? How much of a further decline can we anticipate?
I would anticipate some bottoming out around here. I don't see too much downside. That said, in all honesty, there could still be maybe another 5-10% on the downside. If we look at copper, for example, there are some important support levels around the 5,600, 5,800 level. So we may yet need to at least examine that level. But as metals are viewed as lead indicators, they started falling well ahead of other markets falling. Very similar pattern to what we saw in the financial crisis of 07, 08. Given that they are lead indicators, then they've already priced in most, if not all, of the negative news, given that copper's down almost 20% and the other metals in excess of 20%. One would hope that they're now able to price in most of the anticipated still negative news that could come out, but maybe this is the worst. It always does look bad at the eye of the storm, and hopefully things will now start to stabilize. But we thought that a few days ago, at the beginning of both last week and the beginning of this week, we thought things would stabilize, but they haven't. So we should be at least aware that things could still go lower until there are concrete signs, and I repeat, concrete signs that these trade tensions are not escalating further but are de-escalating, and that's really the magic word. We need some responsible comments now to be made from all sides that they're going to get round the negotiating table, ease these tensions, and hopefully that will be a signal for markets to at least stabilize. But looks far from likely that that's going to happen right now.
Your point is well taken, Robin. Thank you so much for joining us. So unless we hear some sane comments coming in from politicians or the consumer and the producer countries, perhaps some more slide in the metal space is not ruled out. Joining us also to talk about that space is T. Gnansekar of Comtrends. Gnansekar, hi. What is your sense on the metal space? Because just as we thought in Asia today that there was some buying coming back, it's totally turned around.
Absolutely. I think there was some statement from the Chinese ministry that sort of, pushed prices lower. But this rhetoric, I guess, is going to continue till we see some clear, responsible statements coming, like your earlier guest had pointed out. But to me, I think, if I were to look at the current situation and the current prices, I think there's a lot of value in most of the metals right now. And if you look at copper specifically, I think, the cost of production is very close to where we are right now. So it's sort of pointing towards technically and fundamentally that we could be somewhere near a bottom, and a bottom fishing could happen very soon, anytime soon. And since we're near the weekend, I guess early next week we should see some bottom picking happening. So to me, at these levels, I would continue buying with stops, but not be on the short side.
All right. How are you looking at the gold prices? Because that clearly has been baffling. We've been making lower lows every day. We've broken below 1220 in the global markets today. Of course, the rupee depreciation does help cushion the Indian prices. But for how long, and how much downslide are you expecting?
I think after the Powell's testimony, I guess prices broke some critical supports, and we're now headed towards next important level, which is the 1,200 level. So to me, anywhere between 1195 and 1,200 is where a very clear bottom could come into place. If you look at the statements, I think there was some amount of dovishness in the testimony as well, because there is concerns because of the tariff war. So I guess around those levels we could see some real safe haven buying kicking in. I'm really hoping for that. And technically also it looks like kind of overdone at those levels. So as of now, I think it's a sell on any optics. But if in the domestic market, I think one has to hedge the dollar rupee and then sell it on optics.
Oh, well, absolutely. So buying on those downticks in the metal space, but selling the precious metals, excuse me, even at these levels is the cue coming in from Comtrends. Thank you so much, Gnansekar, for coming by and giving us strategies. But with that, it's all the time that we have had on this edition of Closing Bell. After the bell comes up next.